Do you wish that you could know exactly where the Bitcoin price is going? Today we'll look at the one Bitcoin chart that will help you master the bull run. One popular analyst even says this is the one chart you'll ever need for crypto and Bitcoin in general. I'm Brett at CryptoGX, and in this video I'll break down Bitcoin's market cycles in simple terms, explain key crypto concepts for beginners, and most importantly, show how to recognize when the bull cycle might be peaking. By the end of this video, you'll know what signs to watch so you can ride the wave up and step off before it crashes. Let's start with the basics. Bitcoin, like all markets, moves in cycles of uptrends and downtrends. A bull market or bull run is when prices are rising steadily, optimism is high, and investors are mostly buying where basically demand is exceeding supply. A bear market is the opposite. Prices falling, low confidence, and lots of selling. Think of bulls charging upward and bears slumping downward. Bitcoin's history clearly shows these cycles. Past bear markets have seen Bitcoin crash around 80% or more from its peak. After all of the panic selling, things start to stabilize generally. That leads to an accumulation phase where prices are low and flat and long-term believers quietly buy Bitcoin at a discount. Eventually, this sets the stage for the next bull run. A big driver of these cycles is the Bitcoin halving. A halving is an event every 4 years that cuts Bitcoin's new supply in half by reducing mining rewards. In plain English, suddenly fewer new Bitcoins are being created. This built-in scarcity shock has historically kicked off massive rallies in the price. For example, after the 2012 halving, Bitcoin soared from about $12 to nearly $1,000 within a year. And after the 2016 halving, it climbed from about $650 to almost $20,000 by late 2017. Now, analysts often summarize Bitcoin's cycle on a single chart that highlights three main phases: the bear market, the accumulation, and the bull market. Here's what each of those mean. Now, if we look at this video on YouTube, you can see that the bear market is a long downturn. We've got an accumulation that moves sideways in pretty much every single bull run, and then the bull is just this huge upward trend in each of these 4-year cycles. Now, comparing this chart across multiple cycles is how we understand that the market for Bitcoin essentially is cyclical. Now, this 4-year cycle chart is essentially the only chart that you need to at least get the big picture of where Bitcoin stands in its cycle at any time. Let's break down the typical bull run timeline around a halving. Bitcoin's cycle can be further split into 5 phases. About 6 months before a halving, the market is choppy. This is called pre-halving volatility. Bitcoin often sees both strong rallies and sharp pullbacks leading up to the big event. Roughly 2 months pre-halving, we'll see the pre-halving rally. Sentiment turns bullish and price starts climbing very fast from the bear market lows. Then shortly before the halving is the pre-halving retracement, a significant correction, which is around a 20 to 38% drop that tends to occur. Think of this as a final shakeout. It often presents a great buy the dip opportunity. After the halving is the post-halving consolidation. Bitcoin doesn't explode upwards immediately. Instead, it often moves sideways for a few months, encountering resistance and forming a new base. This is a reaccumulation period as the market gears upward. Then finally comes the explosive part, the post-halving parabolic run. Bitcoin breaks out into a parabolic climb, shooting to new all-time highs. This is when FOMO, or fear of missing out, kicks into high gear and the price often goes vertical. Understanding these phases helps you know where we are in the current cycle. For instance, if we're a couple months post-halving and price is climbing but not yet crazy high, we might be in that early post-halving consolidation or the beginning of a parabolic run. Now remember, even during a bull market, there will be dips and corrections. Don't mistake a normal 20% pullback for the end of the bull run. Zoom out and look at the larger trend. So how can we tell if the bull run is topping out? While nobody can tell the exact top, a few reliable indicators can tip us off. One is the time since halving. Historically, Bitcoin's cycle peaks about 12 to 18 months after the halving event occurs. For example, the 2017 bull market peaked 518 days after the 2016 halving, and the 2021 cycle peaked 546 days after the 2020 halving. If history rhymes, one might expect the next major peak to be roughly 500 days after the 2024 halving, so sometime in late 2025. As we approach that time frame, caution is your friend, basically. You want to keep an eye out for the price and keep an eye out on some of these other factors that we'll go into next. Next is the Pi cycle top indicator. This is a popular one that uses 2 moving averages, the 111-day and the 350-day times 2, and these are useful for identifying tops potentially. If we take a look at this chart right here, in past cycles, whenever the 111-day crosses above the 350 times 2, Bitcoin hit a macro peak within a couple days. So far in the current cycle, those lines have not crossed. They're still very far apart, implying that the top is likely not in yet. In other words, the chart's alarm bell has not rung. Lots of analysts also like to watch metrics like the MVRV, which gauges how overvalued or undervalued Bitcoin is relative to its holders' cost basis, and the long-term RSI, which is a momentum indicator. At past tops, these metrics show extreme overheated values. As of now, they remain pretty moderate. We haven't seen the kind of on-chain overheating that marked prior euphoric peaks. As you can see from this Cointelegraph article, you can see there's all of these Bitcoin bull market peak indicators from hold to sell. At the moment, it is in 100% hold. You can see the MVRV score as well as the Pi cycle top and many, many more. You can see the link right here on this Cointelegraph article, coinglass.com/bull-market-peak-signals. We pull this up, we can see it's still in 100% hold as of today on the 16th of July. Now, finally, you want to consider the sentiment and hype of the bull market. Late in a bull run, there's often very peak hype. Everybody's talking about Bitcoin, media coverage is nonstop, and new investors are rushing in from FOMO. A classic sign of a top is when even your non-crypto friends are convinced that buying Bitcoin is a sure thing. When sentiment feels too euphoric and nobody expects a crash, that's when one might actually be coming. In previous cycles, a surge in mainstream attention and sentiment has coincided with the final blow off top. Now, it's important to know that many of these indicators are flashing the opposite of danger right now. As I showed you right here on the CoinGlass site, we're in 100% hold. So as of mid-2025, we likely haven't seen the cycle peak, but it's still very, very important to keep an eye on this particular set of indicators and the charts that I've been mentioning as well. Now, as a whole, Bitcoin's 4-year cycle is driven by the halving. This has been repeated enough times that it offers a pretty useful roadmap. This one chart of the cycle phases can be your guide to mastering the bull run. It tells us that after every halving, we get a big bull market, which eventually peaks and then corrects. By studying the timing and signs of those peaks roughly a year plus after the halving, key indicators like the Pi cycle top flashing and widespread euphoria, you can make a plan to get out before the tide turns. Now, remember that no indicator is perfect and history doesn't repeat exactly, but understanding these patterns gives you an edge. The crypto market can be chaotic, but with this knowledge, you have a calm, data-driven way to navigate it. In short, keep that big Bitcoin cycle chart in view and listen to what history and data is telling you. You'll be far ahead of most new investors timing the crypto market. Now, if you're ready to get some Bitcoin of your own, I put links to Coinbase and crypto.com in the description, where you'll get at least $50 in crypto just for signing up with those links. And if you're interested in meme coins, I left a link to MoonShot where you can claim some free meme coins when you sign up. If you learned something new or just enjoyed this video, make sure to hit the like button and hit subscribe if you want to stay tuned for all things crypto. Thanks for watching. I'll catch you in the next one.